Are you just beginning Forex trading and you're looking for a YouTube channel where you can get vital information about Forex trading? Well, today you've just stumbled on the right video because in this video, I'm going to be taking you through one of the very important information you can use to trade the Forex market like a pro. Hi, my name is Sami FX and welcome to my YouTube channel. So in today's video, as Sam FX, I'm going to be taking you through some of the very important information that you can use to trade the Forex market like a pro. So this is Wealth Factory Forex, and let's dive into the video. All right, guys, as I said earlier on, that this is Wealth Factory Forex, and our motto is impact over money. So we don't really focus on getting money from you, but the main impact we have is the main vision we have, or a mission we have, is to make impact over money. And we know that you have a lot of people out there who are selling their courses, but here we are doing it for free because we believe that building a community is the very essence of being successful, even as a normal company. So in this case, we're going to be diving into one of our goals. I will try to explain to you what our goals are. So our goals, the first one is to provide the learning environment for each and everyone who is looking for information, who is looking for strategies, who are looking to develop a strategy in the Forex market. That is our first goal as Wealth Factory Forex. Then the second one is that, just a minute. Okay, just making sure that the mic is working. And the second one being is to create a simplistic path for everyone. So we are going to present to you strategies, concepts that are very well simplified, because we believe that simplicity is a way to make people understand concept, even if they are very complicated. Then the third one, we are going to be looking at creating a community of traders. So we are creating a community of traders who are going to be able to help one another. So after you learn about Forex here, we are going to send you out to be able to teach others. We're not really going to send you out, but we expect you to go and try to teach others who are looking for the same information that you've been looking for. Okay? Now, the key concept we are going to be looking at in this meeting, we are going to be looking at these key concepts in the Forex market. So the first one is trend of the market. Then the second one is supply and demand level. We know that before you take a trade, before you do anything in the Forex market, you are supposed to identify the trend of the market. So in this case, you're supposed to identify the direction of the market. Is the market ranging? Is the market bullish or bearish? Then after you identify those directions of the market, you must be able to identify the supply and demand zones. Others would call them order blocks, but these are supply and demand levels. In simple terms, supply and demand levels, these are levels of the market where we expect the market to react when it comes to that level. And in other terms, we can call supply and demand level as support and resistance. Okay? Then after that, you're going to take a look at a very important concept, which is liquidity pool. So before you start trading, you are supposed to make sure that you understand what liquidity pool is. Because if you don't understand what liquidity is, then you are going to be liquidity yourself. And you don't want to be part of liquidity, because if you're part of the liquidity, you lose money. Then the last one we are going to be looking at is fair value gap. So I'm going to explain to you what a fair value gap is as we go on. Then we'll get into the chart, try to look at how the market behaves and whatnot, okay? The next one is the order of analysis. Now, we've heard about technical analysis, we've heard about fundamental analysis. How do you analyze the Forex market as a trader, as a beginner, like a professional Forex trader. So the first one that you're supposed to do is identify the trend of the market, okay? So you're supposed to identify the trend of the market. Is the market bullish? Is the market bearish? Is the market ranging, okay? Because if the market is bullish, we start looking for buying opportunities. If the market is bearish, we start looking for selling opportunities at supply levels. If the market is bullish, look for buying opportunities when the market comes to the demand zones, okay? So we've learned about the trend of the market. When you're doing free beginners lessons, we learned about these, and I hope that you still remember what we learned about the trend. We have uptrend, downtrend, and the ranging market. A ranging market is a market that is moving sideways. It doesn't have a defined direction. Then after that, we have liquidity. Then what you're supposed to do here, liquidity, is actually identify the level of demand and resistance, okay? I mean, the level of demand and supply. So in this level of demand and supply, how do you know that the level of demand and supply has got liquidity? So when the market, you're analyzing the market, you have got a supply zone or a demand zone, then above the demand zone or below the supply zone, you have got a fair value gap, of which I'm going to show you later on in this meeting, meaning that fair value, that order block or supply and demand zone has got liquidity above it or below it. So you don't have to take a trade from a supply level or a demand level that has got an imbalance or a fair value gap resting above it, because that is going to make it to be part of liquidity. And then after that, we have to identify where the fair value gap is. So the fair value gap is always coupled with an order block. So this is where you take your trade from. And you have to choose a fair value gap or an order block that has already taken out liquidity pool. And you're going to take a look at liquidity pool in a more practical way as we go on. Then after that, we take a look at an entry model, because we know that you have got small money, we don't have a lot of money in the Forex market. So we can't start trading the market from a bigger time frame as if we are market players, market makers. We are not market makers, we are only retail traders. So we have to make sure that we are taking trades from a time frame that is fit for us to put a stop loss with a proper risk management. So in this case, you identify the trend of the market, identify where liquidity pool is, then identify the fair value gap and order block that has already taken out liquidity. Then after that, start looking for your entry models, entries. So when I start talking about entries, I'm actually talking about you placing a trade, placing an order. So for you to place an order, you have to scale down to smaller time frame, because we know that we don't have a lot of money. We are not market makers. So we have to scale down to smaller time frame. Take a sniper entry. Take a trade that has got a smallest stop loss as possible. Okay? Now, we are diving into learning what a fair value gap is. So a fair value gap is made up of 3 candlesticks. Okay? So we have candlestick 1 here, this one down here. Let's label it as candlestick 1. This one here, the red one, as candlestick 2. Then the third one here as candlestick 3. So the low of candlestick 3 and the high of candlestick 1 here, which is green, all these 2 green candlesticks. So the low of the third candlestick and the high of the first candlestick, there's a gap here that has been left out without being filled by these wicks. So this gap here left out here is what we call a fair value gap. So the market, we know that the Forex market is a balanced game. If the market has left a fair value gap like this, the market is supposed to come and fill in the fair value gap. Now, let's couple the concept of fair value gap with liquidity. Now, what is liquidity? In this case, let's say the market is going up. When the market is going up, we start looking for buying opportunities, okay? So if the market is going up, we are looking for buying opportunities at a supply zone. So let's imagine that above this fair value gap here, there is a supply zone. Then the market is coming to retest here. Most of the beginners, most of us in this group here, take our trade just from this, excuse me for that, usually take our trade from the supply zone, or demand zone, no matter how it is. So in this case, I'm telling you today, don't take trades from a demand zone that has got a fair value gap below it, because right here lies liquidity that's supposed to be taken out. Then the market can flip to the downside, filling in the fair value gap, then go to the downside. I mean, go to the upside. Then in the same case, let's imagine the market is going down. The market is in a bearish momentum. In a bearish momentum, we only look for selling opportunities in the Forex market. So in this case, we are looking at selling opportunities. And where do we sell from? We sell from a supply zone. You don't just sell anyhow. No, you sell from a supply zone. So in this case, you have to make sure that as you're going to be taking your trade, you have to ask yourself, if I've got the supply zone right now, is there a fair value gap above the supply zone? So let's say the market is coming from down here, it's coming all the way to here. Then it reaches here as our supply zone. But above this supply zone, there's a fair value gap here. This means that there is liquidity lying, resting above this supply zone we have here. Hence, we can't take a trade here. We have to wait for the liquidity to be taken out, then scale down to smaller time frame and take an entry from a smaller time frame. Okay, let's take a look at more examples of what a fair value gap is, because maybe others would really understand what a fair value gap is from the presentation we have right now. Okay, so I made a diagram for you here to show you what a fair value gap is. So the shaded regions of the candlestick you are seeing here, that's what we call a fair value gap. Okay, so a fair value gap can also be an order block. The market might decide to change direction from the fair value gap, or it might go to the extreme of the fair value gap until the previous candle that was going the opposite direction. So the market is going up, then we have the candlestick that went down, a bearish candlestick. So that bearish candlestick with half of the fair value gap is your order block. We're going to take a look at that when we dive into the real market. Right now, I'm just explaining to you, but you get to understand more about what I'm talking about when you get into the real market. All right. So right here, this space here that was created, this low here, and this high here, this space here that was left in without being filled in, that's what we call a fair value gap. So the market must come to fill in that fair value gap, because the Forex market has a balanced game. More especially for retail traders, you have to make sure that the market is balanced up before you take your trade. Then the next one, we have this bearish, we have a bearish fair value gap here. This is a bearish fair value gap. This is a bullish fair value gap. And this is a bullish fair value gap. This is a bearish fair value gap. And this is a bullish fair value gap. So this space here that hasn't been filled in by the market, this one and this one here, they're the same. Then we have this one and this one, they are the same. Okay. So this one here, the space here that hasn't been filled in by the market, that's what we call a fair value gap. So others would call it fair value gap zone, an imbalance, inefficiency, just the same. So that's a fair value gap, or you would call it an imbalance. Now, the question that a lot of people might ask right now is, when do we expect to see an imbalance? So we expect to see an imbalance by its name itself. We expect to see an imbalance in the Forex market when the market is not well balanced. What do I mean by the market is not well balanced? When the market is well balanced, the market is not going to have a defined direction. So it will have a ranging market. When the market is not balanced, when buyers exceed sellers, meaning that buyers are in control of the market, and what is going to happen is we are going to have a bullish fair value gap, which is right here shown by a green candlestick. Then if the market has got more sellers than buyers, meaning that we are going to have a bearish fair value gap, because sellers are going to push the market down. So the fair value gap happens when there's an imbalance between buyers and sellers in the Forex market. In a moment whereby we have more sellers than buyers, we have a bearish candlestick being created as a fair value gap. So a fair value gap happens when the market is leaving a certain zone, a key zone, which is a demand zone. Okay. Then a bullish fair value gap happens when the market is going up and then we have more buyers than sellers in the Forex market, meaning that the market is going to go up. So right now, we've come to the end of an explanation we have. And remember what we had at first? We took a look at the thinking process, the analysis process that you're supposed to take as a Forex trader to analyze the market like a professional trader. So in this case, I'm going to be taking you through one of my trading plan I use to trade the Forex market as a Forex trader. So let's dive into my Forex trading plan. Okay, so here we have my Forex trading plan right now in front of me. So in this case, we have 4 steps that we're going to be looking at before we take our trade. And the first step being a daily or 4-hour time frame. So below that daily and 4-hour time frame, there's something I wrote, okay? So daily and 4-hour time frame, I use daily and 4-hour time frame for trend identification. If we go back to where we started from, we saw that the first thing that we're supposed to see, we are supposed to do is to identify the trend, liquidity, fair value gap, then entry models, okay? So coming to our trading plan right now, the first thing we have is daily or 4-hour time frame for trend identification. After we have identified the trend, now what are we going to do? We have to start looking for liquidity and fair value gap. So if you have got a supply zone where it has got a fair value gap above it, meaning that supply zone is liquidity, we are going to be taking the trades after the market has taken out liquidity, okay? Then if the market is going up, we have another block or a demand zone. Then below the demand zone, we have a fair value gap, meaning that we are not going to be taking trades from that level, wait for the market to take out liquidity. Then we must be taking our trade from another block that has already taken out liquidity, because we want to take trades that have got higher probability, guys. Okay, the next one is we are supposed to look for choke for entries. So in this case, if we scale down to here, we had 4 steps, then there we had 4 steps, but you haven't seen this one, liquidity and fair value gap, being separated. So I'd put these ones here together because this is a very combined concept that you're supposed to understand. Then after that, we have entry models. After entry models, I scale down to 1-hour time frame. I don't like holding my trades from 15 minutes time frame. I scale down to 1-hour time frame and hold my trades from 1-hour time frame with a sniper entry. Okay, a good example is what happened today. I only took 1 trade today and I'm done for the day. I'm done for the day. Look, I only took 1 trade. I'm done for the day because I know what exactly I'm supposed to be doing. So we've come to the end of our presentation. Now we are going to be diving into the chart, try to see what exactly I was talking about in this video. All right, guys, so welcome to my trading view here. So right now I'm inside my trading view, and I want you guys to pay attention because here we are going to be looking at very, very important concepts that are going to help you guys to make money in the Forex market, okay? So we are going to take a look at few examples from the Forex market. Then after that, we'll end our meeting because we don't want our meeting to be very long. And we know that our attention span is very low as human beings. So I'm right here in front of my screen. I'm going to delete everything I have here. Then we start with trend identification. As we said last time, as we said just in the previous presentation, we said we start with trend identification. So we have to identify the trend of the market. Is the market going up? Is the market going down? Is the market ranging? So in this case, we're going to be diving into the market. The first thing that we have to do right now here is scale down to 1-hour time frame. Look at the trend of the market. Is the market going down? Is the market going up? Or is it ranging? Okay. Yes, guys. So right now I'm inside my USD JPY. So this chart starts from September 2022 all the way up to 2024. So this is one of the trade we took even with the guys I'm teaching in the private mentorship, the ones who won the competition. So the first thing that I had to do is I had seen that the market here was making high highs, which was this high, this high, this high, this high. These are supply, I mean, these are demand levels. So this is why you're supposed to be taking your trades from the market if you're looking for buying opportunities, all right? So in this case, I'm going to be showing you guys what usually happens when the market comes to the fair value gap. So first of all, I'm going to be showing you here what happened here. So we see this wonder fair value gap here, okay? We saw this wonder fair value gap here when the market came to that zone. What did we see? So the market came to touch into the fair value gap, then a flip to the downside all the way up to here. You could have targeted this previous high, previous low here. So when you take a trade at a certain high, target your previous low, okay? So here is a fair value gap being respected by the market. Then we had another fair value gap here being respected by the market here, the market dropping to the downside, okay? Then a bullish fair value gap here being respected. This fair value gap inside here was being respected by the market. But I'm going to be showing you guys one of the most effective fair value gap in the trade we took last week, and it went in our direction. I think we only held about 4 days, then the trade hit our take profit, all right? So the first thing right now I'm going to be doing is allow me to mark my key levels. Let me take this one here. Sorry, guys, I'm using Zoom. Okay, yeah, so I'm going to be marking my key levels so that you guys can understand what I'm talking about right now. So let's mark this high here. So this high here, right here. So this high here, right here, that's where we're going to put our line as our previous high. So let's put that one in red. All right. So this is our red line. So this is the highest where the market came. We saw that the market came here, then touching for the second time, the market dropped down. So right now here, if we see a change of character from here, then we are going to start looking for selling opportunities from there, all right? So let me try to zoom, since we know where our key level is and where we're supposed to be looking for selling opportunities. So right now, I'm looking for selling opportunities. I'm looking for a flip to the downside here, okay? So my first target should be this low here. This low here should be my first target there. That low there should be my first target, okay? So let's see what the market was doing here. So right now, let's see what the market was doing. Let's see what the market was doing. See a flip to the upside, okay? All right, guys. So right now, we've seen a very nice move to the downside. So we saw this move here to the downside. So the market is respecting our previous level here, which is our key level. So the market is respecting this key level here. After respecting this key level, we saw a move to the downside. And guys, there's no fair value gap above here, meaning that there's no liquidity that's supposed to be taken out here. So we can be able to take our trades from this level here. Now, the next thing that we're supposed to be looking for is we are supposed to start looking for a fair value gap. So fair value gap we have right now here, we have, let's go to 4-hour time frame. Maybe a 4-hour time frame can give us a very perfect fair value gap. Let me delete that one. All right, guys. So I think the 4-hour time frame is giving us a proper fair value gap here. So let's play it out. Okay. So we see a flip of the market to the downside. Now, as the market was going down, so something very interesting happened here. So we have this fair value gap, the market left as it was going down. So the main reason why the market left that fair value gap is because we had more sellers than buyers in the Forex market, hence an imbalance was created. So wait for the market to come to that level, then we'll start looking for buying opportunities, okay? So let's see if the market is going to respect what I'm just from talking about. So let's see. All right, so the market right now is coming back to the fair value gap. Yeah, so as the market is coming back, right now, if we go to 1 hour time frame, so right now we are in 1 hour time frame and we have, I'll draw a red line here. So we are here somewhere there. And this level here, if we take a look at it in 1 hour time frame, that level is a level of supply. So a level of supply, people are going to be looking for selling opportunities. So today you've learned that we have a supply zone here, and above this supply zone, we have a fair value gap. So since we have a fair value gap above this supply zone, we are not going to be taking our trades from here because we know that there is liquidity lying above, resting above here. And that liquidity is supposed to be taken out before the market goes in our direction, all right? So let's see what the market was doing. I think we're going just to spend, okay? Small money traders, beginners right now, they had taken their selling opportunities after seeing this bearish candlestick. They thought the market was going to go in our direction. For me, I can't take my trade. For me and my students, we can't take a trade from here because we know the market is supposed to respect this zone here, supposed to respect an imbalance. So the market is coming to the imbalance. This was liquidity pool. So that's where liquidity was resting. Okay. So let's take a look at if the market is going to start going down from there. So right now, from here, the market is supposed to start going down. So let's see if the market will start going down from here. So put your stop loss above. You can target the previous low here, which is a 1 to 2. And let's see if the market respected what we are just from talking about. Okay. Let's see. Yes. Look at that. Okay. So the market came to this zone here, respecting our zone there. Now the market is going down. Look at that. Okay. Okay. The market has left another fair value gap here. So the market right now has left another fair value gap here. It's going in our direction, but it has left another fair value gap here. So from here, I can be able to take another trade here. All right. So from there, we can be able to take another trade. The market has formed this high here, but we won't take our trade from here because we know the market must come to the fair value gap. So we are taking our trade from there, up there. Then right now, we can extend our take profit to all the way up to this fair value gap here that was formed. So let's try to see if the market is going to come to that level. So I'll show you when we are going to, where we are going to get our trade from, where we are going to enter into the market. Okay. Flip to the downside, yes, but we'll still wait for the market. Okay. So right now, the market is going in our direction like this. Why did the market move all the way down like this? It's because the market after making this move here, the market after making this move, it came to the fair value gap, a flip to the downside and left another fair value gap inside here. So this was a fair value gap that was left. So we could have taken our trade from this zone here. Just put your stop loss above the candlestick that carried a fair value gap. Now our target should be below here, this fair value gap down here. That's where our target should be. Never wanted to show you guys where to put your target from because this is the information I teach those in the paid group. So let's see. Let's continue playing out. Look at that. Look at how the market took out our TP. So the market took out our TP. I think the market is still going. If you wanted to have targeted even this previous one, I didn't see this one here. So this is a low we had said you should have targeted. But for me, my target would have been this imbalance here, just half of it, because we know that the market must always come to the imbalance. So let's continue playing it out. Look at that. Okay, up. Okay. So the market would have come to our take profit full time. So from here, USD JPY will start looking for buying opportunities since it has come to a fair value gap. So we'll start looking for buying opportunities. We can take something like this, targeting this imbalance here. And this is 1 to 4. Just put your stop loss below here. So we'll see how the market is going to be reacting. So let's see if the market is going to be going in our direction. Yes, another one. Okay. So the market right now is trying to start going in our direction. So this is the buy trade we have on USD JPY right now. Then we have Euro USD. I mean AUD JPY. So AUD JPY, I drew a line here, which is supply zone. Then the market made a flip to the downside. But before that, my network is coming bad. All right, guys, so we are going to end our meeting here because the network has started performing. So here we have a supply zone. Yes, the market will start going down like this, but for me, I'll take my trade from this zone here because we have a fair value gap there. So when the market comes to this level, market is supposed to go down all the way up to somewhere here. All right, guys, so thank you so much for attending our meeting today. See you in the next video.